Hey everybody, Bill Bell, Vice President of Advanced Sales with Penn Mutual, and wanted to do a quick video to give everybody an update on where we are from a tax reform standpoint here. We thought about doing a webinar, but we're a little bit far away from the final passage of the tax reform bill. We are doing breaking news updates on Gateway from an advanced sales perspective here, so if you haven't checked those out, please do so. But again, just wanted to do a quick video update so everybody is aware of where we are from a tax reform standpoint here. It's not a secret that the House of Representatives passed what they call the One Big Beautiful Bill. We call it the BBB for short, but essentially it is a huge package of tax provisions and spending cuts that will basically set tax policy going forward in many cases on a permanent basis here. I'm going to focus on just a few of the major tax provisions here. Obviously things like no tax on tips and those types of things from a tax perspective, and then Medicaid and SNAP cuts are super important for a lot of people out there, but they really don't affect life insurance planning for the most part here. So let's just focus on a few of the things that we are seeing from the BBB. First of all, it's really, for the most part, an extension of the Tax Cuts and Jobs Act of 2017, TCJA for short. In fact, what it basically does is it takes a lot of the provisions of TCJA and just makes them permanent. The administration is calling it the largest tax cut in history. In a way, that's true. If you take the TCJA provisions and make them permanent, that is a huge cost from a revenue perspective for the federal government, a huge tax cut for the American public here. But basically, that's what this bill is. That's what the tax provisions in the BBB are. For the most part, personal income tax rates are going to be the same. You'll still have a 37% top rate. You don't have to change the corporate rate. The TCJA corporate provision was permanent, so they didn't have to touch that. There's a couple of other things that are really just not changing at all. They're just going to be permanent. So what is changing? What are the things that we're keeping an eye on? Well, from an estate tax perspective, there was a lot of noise about a potential repeal of the estate tax. That's not going to happen in this bill. The BBB basically takes the exemption, which is a $10 million number plus indexing for inflation, and makes it $15 million. That's not a big departure from what we have here today. It's $13.99 million here in 2025. So it basically increases it $1 million and then makes it indexed for inflation going forward. The 199A qualified business income deduction for pass-through entities will go from 20% to 23%. Again, not a huge change, but just a slightly larger deduction for many small business owners. The SALT deduction, which is important for those of us in California, New York, New Jersey, that would actually go up to $40,000, but there is an income phase out. So for many people, it will still be the $10,000 that we have here today. So what are the next steps? Obviously, the House has passed the BBB. It goes to the Senate now for their own version of a tax reform bill. And there have been a number of senators that have basically said that they will not pass this bill in its current form. However, and they're not concerned about the tax provisions. What they're really focused on is the spending provisions, and that they want more spending cuts. So I think ultimately at the end of the day that what comes out of the Senate is going to look very similar to what's currently in the BBB from a tax reform standpoint here. And I do anticipate that there is going to be something on the president's desk for signature on or around July 4th here. And I think that a lot of people are kind of anticipating that's going to be the day that he does sign the final bill here. The question a lot of people have for me in regards to life insurance planning is how is it going to change? And really the answer is it's not. It would be great if the estate tax exemption dropped back to $5 million, which it was scheduled to do under TCJA, but that's just not going to happen. The good news is that we're not going to have a permanent repeal of the estate tax. The other good news is that for people that have an estate tax issue today, they will continue to have it once the BBB is actually put in place. And so we know that they're going to have a need for planning going forward here, and they're going to know that as well here. So I would say that that's probably the biggest takeaway from a planning perspective here. The other things that we've been doing as far as kind of retirement planning, executive compensation and so forth, those are not going to be changed. One of the other things to focus on in the BBB is there was really no changes to the taxation of life insurance and life insurance products, life insurance companies. So again, from a planning standpoint, really not a lot of changes. I did want to make sure that you knew that the advanced sales team at Penn Mutual is going to continue to be on top of what's going on in Washington. We'll have more breaking news alerts on Gateway. We intend to have at least one webinar on tax reform once we get to the end of the process here. We'll have at least one blog. We'll have a podcast episode on the BBB. So stay tuned for more information. And with that, thanks a lot for joining us here today.